Picture waking up one morning to find out that your life savings have vanished into thin air, your bank has collapsed, and your government is penniless, unable to bail you out. To top it off, your entire country is facing a colossal economic crisis that could trigger a global recession. This isn't a new series coming to Netflix, it's China's reality. China's debt bubble has detonated into a staggering $1 trillion fraud, threatening to unleash economic pandemonium worldwide. Buckle up everyone, we are in for a financial catastrophe of epic proportions. When did it start derailing? It all started with the sci-fi dream come true high-speed railway project. Once a symbol of engineering excellence and a solution to China's economic woes in the wake of the 2008 financial crisis, it has now become a bottomless pit of debt, dragging the country into a murky abyss of financial ruin and destroying its global reputation. How the mighty have fallen. But wait, let's rewind a bit. The Chinese government, faced with a devastating financial crisis that rocked the nation to its core in 2008, came up with a brilliant idea. Instead of just relying on plain old government stimulus packages, why not launch a massive infrastructure project? And thus the high-speed rail system was born, a shining beacon of hope for China's struggling economy. The first long-distance service covered a mind-blowing 1,000 kilometers at an average speed of 350 kilometers per hour. A true engineering marvel. And that was just the beginning. Fast forward to today and the high-speed rail network has ballooned to a staggering 42,000 kilometers of track, carrying 1.7 billion passengers annually. But this project is not just all glitz and glam to show off in front of the world. It created opportunities in the concrete and steel sector and made jobs for people dealing with unemployment, which obviously boosted economic growth. And let's not forget how it made travel between major cities so much more efficient and cost-effective. This high-speed rail system didn't just connect cities, it united the entire nation. Yes, you heard that right, this system was so amazing that it helped break down regional barriers and promote a sense of national unity. Now people could travel across the country in mere hours instead of spending days on boring old slow trains or buses. China's high-speed railway project was once the envy of the world, with its first rail lines being incredibly profitable and serving a massive number of people. The first rail lines built, such as the Beijing-Shanghai and Beijing-Guangzhou lines, were very profitable due to the large number of people they served. But China didn't know when to stop. China, in its infinite wisdom, decided to build even more rail lines all over the country, even in areas with barely any passenger traffic. The result? High-speed trains running at idle capacity, with some routes operating at less than 40% capacity. The project started becoming what we call a train wreck. The problems with this project are manifold, from poor planning and mismanagement to outright corruption. Many of the new rail lines were built in areas where there was little demand, which is like trying to sell ice skates to Eskimos. Naturally, low passenger volumes and revenue followed. And if that wasn't bad enough, the cost of building these new rail lines was sky high, leaving China with a massive debt that it's struggling to repay. It's a classic case of biting off more than you can chew. China was so focused on emulating the initial success of the high-speed rail lines that it lost sight of the bigger picture. Now they're left with a railway system that's hemorrhaging money faster than a punctured balloon. All of this gave birth to the debt trap. China's high-speed railway network has certainly expanded at an impressive rate, with a 91% increase in just 5 years. However, this growth has come at a significant cost. The provincial government's mega borrowing to monetize the railway lines have created a debt trap that's now squeezing the coffers of the state-owned Chinese railway company. And we're not talking small change here, we're talking billions of dollars. In 2018, over 60% of high-speed railway operators lost a minimum of $100 million, with some reporting net losses that could make your eyes water. Despite transport economists in China predicting a debt crisis for the high-speed railway, the country still went ahead and built more lines, ignoring the warning signs. As a result, Chinese railway companies have been drowning in debt since 2015, with their interest payments far outstripping their operating profits. The result? Years of successive losses and an ever-deepening financial hole. China's high-speed railway project has turned into a massive debt trap, costing over $1 trillion. The pursuit of speed has led to poor planning and mismanagement, resulting in underutilized routes that are operating at less than 80% of their prescribed capacity. The State Council has also asked all governments to ensure that their railway debts remain within a rational range by 2035. The increased heat on the debt-ridden operators has also dented the bottom lines of investment banks and shareholders of China's Railway Development Fund. To make matters worse, the pandemic-induced travel restrictions have hit the railway industry hard. Passenger earnings in the first quarter of 2020 took a 54.8% year-on-year crash, making it difficult for the Chinese railway company to pay high assured returns to investors. The interest rate on the 9 20-year bonds issued by the Railway Development Fund crashed from a high of 5.78% in 2014 to an all-time low of 3.97% in 2020. As a result, investors have lost faith in state-owned companies and the high-speed railway project as a whole. This has dented the bottom line of investment banks and shareholders of China's Railway Development Fund. And the cherry on top, corruption. The firing and detention of the country's top railway official marked the beginning of an ongoing corruption investigation that has uncovered billions of yuan in financial irregularities. The massive spending associated with the rail expansion has been linked to kickbacks, bribes, illegal contracts, and even sexual liaisons. Former Railways Minister Liu Zhejiang was dismissed in 2011 amidst corruption allegations, and news reports suggest that he was involved in taking a cut on high-speed projects. In 2011, then Railway Minister Liu Zhejiang was reported to have accepted $116 million in kickbacks, and that he had taken a 2.5% cut on high-speed projects. Even the Deputy General Engineer of the Ministry of Railway, Zhang Shuguang, was also suspended. His crimes? He took bribes of more than 47 million yuan. All of this has left a stain on the Chinese high-speed railway's reputation and has led to concerns about the project's future. Even though in the first quarter of 2023, China's economy grew by 4.5%, but many companies from the European Union are gradually withdrawing from China. But apparently, China still isn't slowing down. China's high-speed rail network seems to be on steroids, with 2,168 kilometers added in 2021 alone. China's railway expansion plans are even more ambitious, aiming to reach 50,000 kilometers by 2025 and 70,000 kilometers by 2035, a staggering 70% increase from the current level. But with each kilometer of railway costing 120 million yuan to 130 million yuan, a 30,000 kilometer expansion will require a whopping 3.6 trillion yuan. So how will China Railway cover the cost? By selling bonds to state-owned banks and brokerages, of course. And to top it off, the Chinese government has allowed the company to issue another 300 billion yuan worth of railway construction bonds. The competition among regional governments to create jobs and foster related businesses is driving this massive expansion. And China's railway's close relationship with the government is only adding fuel to the fire. But how is China going to manage the high expenses of such large-scale expansions while juggling the economic crisis and grappling debt? The country has some tricks up its sleeves. For instance, it's focusing on the freight service, and it seems to be working in the favor of the nation. How? The operating services of freight trains have surged by 41.3% in Europe in 2022 compared to 2020. The company's revenue from freight service has even surpassed that of passenger service. In an attempt to attract private sector funds, China Railway has listed several subsidiaries since 2020, but experts remain skeptical that this move will have any significant impact on the company, which is a massive state entity. Despite the debt problem and mounting concerns, China's government seems determined to forge ahead with this grand expansion plan. As China Railway continues to expand its high-speed rail network and the country navigates its debt problem, it remains to be seen how this will impact China's economy in the long term. Will the investment in high-speed rail pay off, or will it lead to further debt and economic challenges? Let us know what you think in the comments. Thanks for watching, and we'll see you again soon. Make sure to watch the next video.